Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. This video is for educational and entertainment purposes only. I am not a financial advisor. I recommend highly that before buying any security, speak to a financial advisor and do your own due diligence. Hey everybody, Tim from Alpha Wolf Trading coming back at you with a follow-up, but this time I've got the actual, the head honcho, the big man in charge over at LifeMD, which you may have noticed over the last couple of days. Well, actually, what am I saying? The last few months has had quite a nice move to the upside. And actually, I think right now you are sitting in, we'll get to it in a minute with the chart, but I think you're in blue sky territory. I don't think you have any overhead resistance. Justin Schreiber is here. Justin, thanks for coming on and giving us an update, man.
Thanks, Tim. It's awesome to be on your program. Think very highly of what you do and the companies you get behind.
Well, this is one of the few companies that's actually making me look pretty good right now. So I really want to thank you for that.
You're welcome. You're welcome.
So for those that don't know, I mean, I had Mark on before, and he also has an immense amount of confidence, and that exuberated from him when we spoke. And I just said the same thing to you before we actually hopped on: is I love your confidence, right? So why don't you, for those that maybe don't know what LifeMD is, just a real quick breakdown of what it is.
Sure, Tim. So LifeMD is a 50-state, what we call direct-to-patient telehealth company. That means, we're a company that has a 50-state network of virtual providers, along with an entire ecosystem for delivering virtual and in-home care. I like to describe LifeMD as a top 5 player in the space. Really importantly, we're a platform for delivering virtual care. So we have a big business that everybody knows about in weight management and GLP-1 medications. We have a big men's health business. We have a growing women's hormone therapy business. The beautiful thing about LifeMD, even when you compare it to the other top 5, leading direct-to-patient care platforms in the US, is I think we're the one that has the most versatility as a platform. I mean, LifeMD is an amazing brand, and we literally can do anything. And it almost like if you look across our offerings, they're all very different demos. A couple of the unique things about LifeMD that we like to point out. One, we're very proud of our medical group. We have a 50-state affiliated medical group. It's about 50 providers right now and rapidly growing. One big differentiator is most of our providers are full-time employees of LifeMD or full-time employees of our medical group, which allows us to deliver incredible care, and also launch all these different offerings and, just builds an amazing culture. We have an incredible technology platform. It's very, very complex to do the types of care that we do throughout the entire country. When you think about the prescriptions, the doctors, the nurse practitioners, the labs, all of the other follow-up, you all know how complex it is when you go see a doctor, even for primary care. So that the technology platform we've built, we're already supporting hundreds of thousands of active patients, and we've built it to support millions of patients and beyond. The last thing that I think is really important to know about LifeMD is, we started as a platform for marketing over-the-counter healthcare products directly to consumers. And one of the unique things about our company is we have this incredible, patient and customer acquisition capability. We're spending right now on the healthcare side of the business around $60 million a year on direct patient acquisition efforts. And that enables us to control our own destiny, right? I mean, we know when we give you projections that, we know that our advertising and media teams are going to be able to execute with a very high confidence level. And when you don't have that capability internally, it's almost impossible to make those predictions.
Right. So when I had market, I'm trying to think of I think the stock was sitting at, when was it? It's had a meeting. I think it's up about 300% from where that's where it's at, about 300%, right?
Yeah, well, the low, I mean, the low was, it should never have traded. Well, should never have traded there. I'm probably not supposed to comment on that, but the low was between $1 and $2 a share.
Right.
So at 9 or 10, it's an amazing return over the last 12 months.
So for those people that may be thinking that it's too late, I can't chase it up here, right? I would disagree with that wholeheartedly, because how many shares do you have outstanding fully diluted?
There's a little under 40 million shares issued, and if you fully dilute it, it's closer to 50.
Okay, so 50 million shares, which still, I consider that to be thin. Right? It's tight. The
other big thing to point out is about 25% of the company, which is owned by myself and the other founder and insiders, which is a really unique thing in small cap markets, right? It's really common in small and mid cap markets to see a lot of these companies that have very, very small insider ownership. And I mean, as an investor, that always makes me, it's always concerning to me, right? When you see a management team and insiders that own sub 5% of a company,
right?
This feels like people aren't willing to put their money where their mouth are. I mean,
right.
where their mouth is. So,
and you don't have that issue within your company.
I mean, Tim, I got asked by a shareholder this week, have I ever sold a share? And I said, not only have I never sold a share of LifeMD, but nobody on the management team has ever sold a share except for Stefan, when early on he sold like $100,000 or $200,000 when the stock made its first big run, so he could buy a house, like put a down payment on a small house in California to a friend of mine, not even in the open market. But everybody is long. I think the fact that we were able to retain, we brought on a lot of our management team when the stock was between $10 and $20 a share before, and they're rock stars. And I think the fact that we were able to retain them all as the stock traded down
volumes. That speaks volumes, right?
Says a lot, right? Says you can really, and they're not high paid. Like, go look at what the salaries are at LifeMD, compare it to another 5 or 10 digital health companies. I mean, we take every single member of our C team is here for their equity, which is mostly performance based. It's based on us hitting EBITDA and earnings numbers and some top line revenue, but most of it is structured around top line revenue and EBITDA in the, between 100, 150 and $200 million.
All right, so I want to highlight a couple of things. So one of the things that is really nice about your telemedicine or teledoc or whatever you want to call it, right? Is that you get, instead of like with some of these organizations, you don't have a primary care physician. You have whoever you get on the phone, right? With you guys, you can have a primary care physician, right?
Every provider that works for LifeMD or treats LifeMD patients is trained in family, is a family practitioner. We use more nurse practitioners than doctors right now because, again, the dollars just go a lot further. And what we found is that for most of the conditions that we treat, the MDs on our team can work closely with nurse practitioners. They're really, really smart. They have a lot of experience, and patients are just as happy with a nurse practitioner for most of these things as they are with a medical doctor.
That makes sense. It makes really good sense, actually.
And this is a trend that you're seeing across the healthcare system. We have to do more with nurse practitioners and kind of, we have to put more lower cost personnel around medical doctors in order to deal with the shortage of doctors that we're seeing and to enable them to do more.
So what you just said, does that concern you at all? The shortage of doctors that you're seeing? And I mean, I have heard that, and this kind of blew my mind, but the hospitals and these healthcare facilities are actually not real friendly to the doctors and the nurses. They get assaulted, verbally and physically. I mean, I know of a security company that is actually now having to put security on hospitals because they fear, the employees fear for their lives. Is that
I mean, I don't work in a health system, so I haven't heard that from friends of mine that do. It doesn't surprise me. I think to answer your first question, I'm not concerned because I think the answer is disruption and technology.
right?
I mean, the problem is we still have a healthcare system where people are sending faxes. I mean, isn't that just insane? Like, my doctor still asks me to fax over materials. We have to have fax machines in our patient care center. I mean, so think about how much technology is done to disrupt every other aspect of the economy, from self-driving cars to things like Uber to Airbnb to all of this stuff, right? Healthcare's, I mean, again, some companies like LifeMD and some of our peers have certainly disrupted some of these more lifestyle markets, but it's really only starting to trickle in to the primary and specialty care world. And if you think about what technology and artificial intelligence and in-home tools has the potential to do, and how much more efficient they can make doctors, it's pretty incredible. We actually could probably, we should be able to deal with the shortages that we have, but with just using technology, using better processes. I mean, better clinical decision-making tools, which already exist, but will be, I think, greatly, greatly enhanced with artificial intelligence and, large language models like we're all familiar with now.
Mm-hmm.
It's completely game-changing. Most of the stuff that we're using a doctor for right now, we're not going to need a doctor. You're not going to need a doctor for in 5 years. Most of the stuff that the average American sits in a waiting room for right now to see a primary care doctor, you're going to be able to do from your home with using a wearable like an Apple Watch or a Fitbit and other in-home tools. They're going to be able to see all your vital signs, not just that one time, by the way. They're going to be able to see them for the last 5 years in real time, 24/7. And you're going to know the second that you come down with a sickness. Like, our smart devices are going to diagnose you before you even have symptoms because of differences in your respiratory rate or your body temperature and things like that. So this is the future, right? And not only can you imagine what that will do for outcomes and for preventative care, but it makes the doctor's life much more easier.
Right.
So I don't think all we need is technology. I mean, we need the right technology. It's going to take 5 or 10 years for it to mature, and it's hard to get physicians and healthcare organizations to embrace technology. You have to make sure financial incentives are aligned as well. But over time, this is going to happen. And this is why I'm so enthusiastic about LifeMD. And this is what people miss when they start saying, oh, well, the telehealth business only grew 20% this quarter, and there was $500,000 off on the bottom line this quarter, and they thought they were going to have 37,000 patients. They only had 33. It's all, look, we have a business that's well capitalized. It's never going to run out of money. And we're still, in my opinion, the most exciting and biggest growth market in my lifetime. That's why I decided to run LifeMD, because even before GLP-1s, I knew that I would never be able to run a company that was an early mover in what I think is going to be a multi-hundred-billion-dollar market shift. And other smart people think that as well, over the next 10 years, not the next 50 years. But like, this is an imminent, massive market shift. And then we woke up one day, Tim, and we saw GLP-1 medications. And then they added another $100 to $200 billion a year to the TAM potentially. And LifeMD was perfectly positioned for the GLP-1 market because of this incredible virtual and in-home care platform that we had spent the last 2 years building.
You feel
look, a lot of these things in life are being in the right place at the right time. It takes intention to do that, and you obviously have to have the right tools, and we had the right platform and people to be able to capitalize on this. But there was certainly a lot of luck involved in both us.
Nothing wrong with luck, man.
Nothing wrong with it. Yeah.
Luck. I mean, yes, luck kind of, but it was hard work and sticking your neck out a little bit, right?
We stuck our neck out. We all did. We all gave up other things that would have been more lucrative in the short term, for sure.
Yeah.
And we all went through a lot of, we all worked really hard. That's one thing I'll compliment the team at LifeMD. We never started out like a lot of these other companies with hundreds of millions of dollars of venture capital money. When you start out that way, what do? Right? You go out to the big companies, you hire really expensive people. They're great. I'm not disrespecting them, right? But you go hire expensive people, and you think about, you think very differently. It's like being born. It's like your dad giving you your inheritance at the age of 18, and you wake up at 18 years old and you have hundreds of millions of dollars. You probably never develop a good work ethic. Right? Very rare.
Probably not.
Right. And I'm having fun here, right? But I'm exaggerating to tell you why I'm proud of LifeMD. We have this mentality at LifeMD where when we launched our ED business, we had hundreds of thousands of dollars in the bank account. We were running out of money. Our two biggest peers had hundreds of millions and we were competing with them. And we went to market, and we built a great business, like, despite that. And we've kind of been in that scrappy mentality really up until, the last 6 to 12 months.
It's funny. Warren Buffett, one of the things that he says is the killer of companies is complacency, right? Resting on your laurels. It's that scrappiness that you have to continue to have, right? Like everybody's coming after you, right?
Yep.
Whether they are or aren't. I mean, you have to, what drives you internally is that constant, we got to keep improving, regardless of what anybody else is doing around you, right? Who cares? You just have to improve. Does that make sense?
Yeah, 100%. I mean, that's that's how we all think. I mean, I think a lot of that is just rooted in the fact that we care. I think that really, and you've seen this, I'm sure, in your business, right? You've invested in companies, and the management team or the CEO and the board, they go out and they tell you one thing, and then they just go out and they do that massive overnight financing in your face. And they're going to go have a big celebration. They're never going to think twice about you or all the 10,000 retail shares in the company. Like, it's the opposite, Jim. Like, I mean, aside from the insider ownership, by the way, if you look at our Noble list, our shares, like, I've been putting all my friends and my closest friends and family in the stock for the last 6 years. Like, we do something wrong, we screw this up. I mean, and by the way, it's not even my family that I care about, right? I look at look at how many people have invested thousands of dollars. As I said in our shareholder letter, like, I look at our job here as managing right now a couple $100 million of mostly people's hard-earned money. And yeah, there's a big payday for us, but like, what would hurt, I think, all of us, certainly, the co-founders of LifeMD and my C team, is like, what would hurt me more than anything else is not me not making a ton of money on LifeMD, but like all these other people that trusted us. If they, if they get hurt, like, that's the worst thing that can happen. And that's what drives me. And it's the same thing that drives a fund manager, right? Like, if you're ethical and you have a good heart and you care, like, you probably have made some money, right? The last thing you'd want to do is blow it up and hurt people.
Absolutely, absolutely. And I don't see that as being I don't see that as being a concern here, right?
I don't worry about that anymore. I mean, I look, again, as you always, even very large companies have you always have to be on your guard. Even very large companies have unfortunate things that happen to them.
Absolutely.
There are always things that can blow up a company. I think the biggest risk to most companies is regulatory risk, especially when you're not going to have like a sudden shift in the market that's going to destroy, the TAM that you're focused on.
Right.
We've invested really heavily, right? And I mean, early on, I was super nervous about the regulatory side just because it was uncharted territory. We always were super focused on doing everything we could to be a very, very conservative player and being compliant with, every federal and state law within the healthcare system. But now we have the balance sheet. We invest millions of dollars a year, if not more, in just the best counsel on the planet. And even when I compare us to our larger peers, we're more conservative. And we have one of our board members who I'll mention is Bobby Jindal, who's just an amazing human being. He was the #2 guy at Health and Human Services and ran for president and 2-term governor of the state of Louisiana. And Bobby basically runs our compliance program, and he's great, and he doesn't miss anything. And he's brought in, the former who's who of HHS and the AG's office and all this, and they're all on our team. And
Right.
I feel really awesome about that. And I think that's probably the biggest risk to most healthcare businesses, right? Is regulatory risk. That can kill a business overnight. But otherwise, you need to keep it financed. We need to make sure we can get it, keep it profitable. And I think the most important thing for management, when you have such a large and diverse opportunity like we have with a platform like ours, is really making the right, like, betting, like, focusing in the right areas and not trying to do too much and then just executing.
See, this is beautiful. I mean, this is the recipe for success right here, right? I mean, you just kind of laid it out. And a lot of companies in the small micro cap world, a lot of CEOs, they don't understand the capital markets. I think you have a very good handle on the capital markets. I know Mark does, right?
I tell Mark everything he knows. Now we're gonna make sure he watches this.
I got to tell you, man, the first time I actually met you, you were not nearly as comfortable as I can see in you today, right?
I installed a dog fence at 6 a.m. this morning for my Chihuahua, and I think it's got me in the groove for this.
I love it, man. I love it. No, you got to feel good, man, right? I mean, you get through COVID, Supply chain issues, fastest interest rate hike cycle in history. Just those are some pretty challenging environments right there, right?
Yeah, I do. I mean, I feel good. COVID was a catalyst for LifeMD.
Yeah,
So that really didn't, I mean, that actually, like, the stock went completely bananas during that time. It ended up not being a great thing for us, but it enabled us to raise some less expensive capital. But I feel really good, Tim. I mean, the best thing about where we are right now is just the business being permanently capitalized and just on the cusp. And we're profitable, consolidated with Worksimple. The business is now EBITDA positive, which is incredible. And just watching once the telehealth business is EBITDA positive as well later this year, that really takes a lot of the stress off, right? That's a big deal.
yeah. All right. So, um, potential acquisitions. I mean, at this particular point in time, I mean, does it? Are there?
No, we're not going to acquire anything. I mean,
No.
if something amazing showed up that was making a ton of money and the multiple was right, would I look at it? 100%. But we made a mistake with a small acquisition in the allergy space. It luckily was very small, it was a couple $1 million, but we have a platform where we can just expand to new verticals that are massive, like we demonstrated in GLP-1. Everybody else that we're going to buy is going to want us to place a lot of value on their technology platform and their medical group. And why would we do that? We think ours is better than, I mean, just as good as anybody's in the country. I'm not going to pay for that. So it's very hard, right? Unless you see dark days for telehealth, and you have a lot of companies just need to blow out assets. And there's been one or two of those. We just weren't in a position to buy them. So if there was a no-brainer, it's not our focus. Like, let's just keep putting up massive growth numbers and get the business super profitable. And that's
And
that's
give
the
the best healthcare service out there.
yeah. Yeah, I mean, that is something that we really tried to drive home in our shareholder letter. Like, we want to be the leading provider of virtual healthcare in America. And we think we're on the right path to doing that.
Yeah, and I happen to agree with you. So, that's why I believe that even though the chart may look like it's had this, monstrous run, um, this is very early stage, very early days for this company, as far as I'm concerned. Right?
Look, I definitely am not allowed. I definitely am not
I know
allowed.
you.
My general counsel will freak out if I start talking about when people should buy the stock and if they should. I can't go there. But I can talk about the longer term vision. And if you look at the market opportunity, not just in the GLP-1 space, not just in the men's health space, but across, all of the large chronic conditions, which we've proven now that we have a platform that we can scale across really any complex chronic condition. If you look at the market opportunity that exists today and in on the lifestyle side of the business, and just things like even erectile dysfunction, dermatology, hair loss, hormones, a lot of these other cash pay compounded drugs that are just gaining popularity. There are just so many markets where if LifeMD were to capture a few percentage points of a market, it's another $100 million a year business with great retention that's durable. I think it's very easy for you to build a model that suggests that the company will be much larger than where we are today. I think just to focus on this year, the growth opportunity for the GLP-1 business and for the hormone replacement therapy business, which is under our RexMD brand. I mean, both of those are enormous. Plus, we haven't talked about Medifast, which is a partnership that we did
Yeah, I
last
actually
year.
wanted to ask you about
Yeah.
what spurred Medifast?
Well, what spurred Medifast? We started talking to them kind of mid last year. They're one of the largest diet and coaching, weight loss diet and kind of weight loss coaching companies in the US.
Mhm.
We spoke to a couple of companies in this space. It was through a friend of mine, one of our advisors, made these introductions for us. We talked to Nutrisystem, we talked to Medifast, talked to one or two others. And look, Medifast is a really high quality company. They have 40,000 independent resellers, basically coaches across the company that sell a lifestyle coaching and diet program for people that want to lose weight. Clearly, medical weight loss options have really disrupted that market. People want a drug. They don't just want to try the food thing, which they've probably failed on a lot of times in the past. And we did a pilot program with them. I was really proud. They tried to do a pilot program with multiple small and large telehealth companies. Nobody else could get it off the ground, even the pilot program. And we executed with flying colors. We got this thing launched. It was very successful. And ultimately, Medifast paid us a $10 million upfront collaboration fee to use our platform. They made a $10 million direct investment in the company as well, just to really strengthen the partnership and show how committed they were to it. And then beyond that, I mean, it's going to be an amazing new acquisition channel. It's first quarter was successful. Don't really want to talk about the numbers, but I think initially success, well, I shouldn't talk about the numbers, right? But I'll just say if it's successful, it could and should very easily be a couple thousand patients a day. And think about the power. That's where it could easily get to. Think about the power of 40,000 coaches out there offering this bundled comprehensive package for weight loss that includes a clinician, a medication that's very efficacious, and a coach and food. I think you crush. I mean, I tell the leadership at Medifast and Optavia all the time, if we make this work together, we win. No one can compete with us in the direct. No one can compete with 40,000 awesome, high quality, well-trained coaches that are going out there and leveraging their networks. And these coaches also run their own ad campaigns. So many of these coaches are actually running their own search and social media. It's really powerful. No one can compete with that if we get it. And no one can compete with how comprehensive it is either. So it's really an exciting partnership. And there's opportunity as well behind GLP-1 for that network and behind weight loss. You can then use that infrastructure for things like sexual health, for things like hormone therapy, for other chronic conditions like cardiovascular health.
Right.
So it's exciting. It's early days. Medifast has a very long-term vision, on making this work. They have an awesome balance sheet, and we work very closely with them. But it was a good deal. It's very valid. I thought it was very validating, right? I mean,
absolutely.
Me saying that we're a platform, and I mean, you couldn't demonstrate LifeMD as a platform any better than with that transaction.
Yeah, no, I agree 100%. So over the next 6 to 12, what do you feel the catalysts are? Just continue executing. You just said if you get it right with Medifast, that could be a big windfall, right?
Yeah. I think the biggest catalyst over the next 6 to 12 months, the biggest catalyst is just going to be just awesome growth and profitability across the whole business, and certainly in the GLP-1 business, right? I mean, we've been very clear about that we conservatively guided this year and didn't factor a lot of things in like Medifast, and so we're really excited about just the earnings that we can put up this year and the revenue. I think that there are some other potential strategic partnerships that are possible this year. Some that could come with upfront payments, like we did with Medifast. I think if we could execute on a second one of those, that would be very big. We're launching our insurance and Medicare programs this year. I think that's a very big thing for the company. It just expands the market. I think it helps with retention. And I think that Worksimple, we have this non-core subsidiary, Worksimple, which is an incredible business run by a great operator, Sean Fitzpatrick.
Can you give us a quick rundown on what Worksimple is? What is Worksimple?
Yeah, we bought we bought 51 Worksimple is a PDF a PDF converter, a document signing. It's a document management platform, similar to like a DocuSign.
Okay.
Sean was a friend of mine who's the founder. LifeMD bought 51% of Worksimple for $250,000 5 or 6 years ago. We think the business is now worth around, circa $100 million. So we generated a 401 return on that initial investment for our shareholders if we sell it for $100 million, of course. It's a great business. I think the plan is the plan is likely to sell that business at some point. We've said in our current investor presentation and many times publicly that we think it's worth around $100 million. And the idea is to sell that, put the $72 million. We own about 72% of it. So put that $70+ million on the balance sheet, and just continue to focus on building an incredible telehealth company. It's a great business, and it's going to, like, I have no doubt that whoever buys it is going to do very, very well on it. Sean's just the kind of guy you want to invest in. But for us, I think, as I've told you before, it would be somewhat disingenuous for me to go out and talk about how massive and historic the telehealth opportunity is, right? And over the next decade or two, and then say, hey, well, we need to keep this kind of completely non-core asset that we could sell for this incredible return. We need to keep this for diversification, right? I don't think investors want me to diversify their portfolios for them. I think they just want me to do what I say and go build an incredible telehealth company that makes a lot of money down the road.
Right. And I think you're well on your way to doing that. Right.
Thanks. We're working hard at it every day.
No, man, you're a straight shooter. I love talking to you, Justin. I think you got a great vision. I think you've built a great team. You've built a great business. You've paid attention to the little details. I think having a primary care physician that you can talk to every time you need to come in, call into telehealth, I think that's important. I think those little things, the more you have of those little things, they add up. Right, that differentiate you from everybody else out there, right?
Yeah, I think we're coming into a world, Tim, where the biggest differentiator is just our size and our ability to continue to scale, and our balance sheet, and just the investment that was required in our technology goes back to the size. It's just become a space where small companies are going to have a very difficult time breaking into. And we're in a great spot as a company, right? And I think that we're going to continue to execute.
All right, listen, man, I would love to have you back. Maybe when you have your next catalyst. Before we do that, let's take a look at this really exciting thing called the chart.
I'll come back anytime, Tim. Let's do the next one in the studio.
Oh, yeah, absolutely.
You do in-studio interviews? I'll be there.
Hey, would you stop? My dog right now, she's not digging the fact that I'm not paying attention to her. All right, so let me move this out of the way. By the way, so listen, everybody, what I would recommend highly is, if you're, I don't know, gun shy and you don't want to, chase stock because you feel as though you have FOMO, and you want to wait till it pulls back. Look, I'm not telling anybody what to do. All I can say is that if right here, the stock, if it pulls back to this $9 area, that was a big spot. That was a big spot. Can it pull back to this $9? Yeah, of course it can, right? Can it pull back down to $8.50? Sure, that's possible. Those would be, I think, good spots to take a starter position if you're not in it. I'm not telling anybody to go all in. This has got I consider to be a small amount of shares outstanding. Anything under 100 million, I think, is small. And I think you can sense from Justin here that this story is really just kind of getting started. So beautiful chart. going from the lower left to the upper right, which is definitely the right trend. And when you have that kind of momentum long term, the longer term the trend, the more strength it has. And this one's just getting rolling, man. I mean, this is really an exciting story. And I would, at the very least, go to the website and sign up. If you don't want to take a position today, at least sign up for their investment alerts, right? That way you can get stuff sent directly to your email and you're paying attention to what's happening with the company. Does that make sense? So beautiful chart. And I think it's going to continue. What happened? Hey, Justin, just real quick. What happened here with the big, what was that?
One day we woke up and Eli Lilly put out a press release saying that they were going to be launching Lilly Direct, which actually is a positive thing for us to help. It was a way for them to ship their GLP-1 medications directly to patients. And they also said that they were going to be, partnering, not really partnering, but they had a preferred telehealth provider that they were going to link to from their website, which again, this is a small company that's been around forever. It was just an overreaction, in my opinion, by the markets. At the same time, there was an AI generated kind of like silly report that came out on another website that said that the shares were 30% overvalued. And I think the two things together just spooked. Yeah, there was a lot of the stock was performing really well. And I think a lot of people just got a little bit spooked by it. And there was an irrational move in the market. That's my opinion. I'm not supposed to be giving trading advice.
But that is exactly what happened.
Yeah.
Right.
There was no reason, in my opinion, there was no reason for the stock to trade the way it did.
Right. Yeah. It was panic and it was not a material event. So in any way, shape, or form, it's actually a really good buying opportunity. What's really nice to see about this too is this move higher. You're getting some good volume. This is not on low volume. This is not a low volume move higher. You're making new highs with some volume. And that is that's exciting to see from a technical standpoint. So all in all, Justin, I'm going to give you an
A. Thanks. That's great.
Keep doing what you're doing, man.
I was at best a C student in school, so it's good that I'm getting A's now in the business world, Tim.
No, it's fantastic, man. Really, truly. Thank you for coming in and doing this.
Right.
And hold on one second. I'm gonna cut this. You feel as though I missed anything?
No, I think you did a great job. I'll just mention we put out a shareholder letter as well with our numbers this week, and I think that's a great way for anybody that really wants to understand our vision for the next 5 years should go read the shareholder letter. And
absolutely. And not only just as a potential investor, but I'm sitting here thinking anybody that's watching this may want to look LifeMD up as and become a customer, right?
Yeah, absolutely. Yeah. If any of your followers who are shareholders, want to have an interest or want to get on one of our weight loss programs or any of our programs, tell them to reach out to me. We'll make sure they're well taken care of. Excellent. That's awesome. That is awesome. All right. Thank you, Justin. Hold on one second. I'm going to turn this off.
Thank you for tuning in to another CEO interview here at Alpha Wolf Trading. Today we had Justin Schreiber from LifeMD, ticker symbol LFMD. I hope you enjoyed today's interview, and if you did, please do us a favor. Give us a like. How about giving us a share? And make sure you smash that subscribe button. Those things are extremely important to us here at Alpha Wolf Trading. And until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.